Hello, this is Pat Walker at Mission Winners. I'm making for a video for Ernesto and the team on how to buy a gap up. And this is a very important subject and video. So let's go in and we're going to show you two examples in one chart. Here's this bar, and I'm going to drag this back, okay? I'm going to make it a little bit bigger so it's easier to see. And we're going to drag it. So here's the first day. There's no gap up here, but we said to ourselves, it picked up here and it had a pickup in volume. There's a potential for a gap up the next day. Advance it one bar, and look what it did. It gapped up. See, here's where it closed. It gapped up and closed near the highs. So here's a gap up on this day. Now what I'd like to do, this is 331. I'm going to show you something now. We're going to be real specific with this, okay? We're going to go back to 331, and this is the first bar on 331. The first bar, all right? And it gapped up. You can say, well, I guess it gaps up. We'll just buy it somewhere in here. No, you're not going to use a 30-minute bar to enter on a gap up. This is Tesla when it gapped up. We're going to take it down to 10-minute on 331. Which is back here. See where it says 331? That's the first 10-minute bar, and it was a very strong bar, and it closed near the highs, and it did it on volume. So it satisfies all the constraints. It makes sense on the day chart, and it makes sense on the 10-minute chart. So how could you enter this? And this is how you would enter it. All right, and this is aggressive. Remember this. This is an aggressive setup. Here's your entry spot. If it takes out the highs of that first 10-minute bar, that is a buy. Okay? If it takes out the highs of this bar, that is a buy spot. If it takes out the lows on this first 10-minute bar, that would be your sell. Okay? So advance it one bar. And what does it do? It takes out the highs on that bar. And it closes down just a little bit, but it's still okay. And I'm pointing this one out for a reason. The next bar, it comes down, but it does not take out the lows of this bar. So you're still in it. But you're experiencing some pain. You're down about, at one point, 8-9 points. But it's also a $640 stock. Okay, advance it one bar. And it starts to lift up on a pickup in volume. Okay? So you're in good shape. Now, if you bought this gap up, okay, taking out the highs of that bar, you're now in good shape, but you had to endure some pain. What would be, let's do the real world, if you bought it right there on that bar and you watched it go down here, you're still in good shape, and then it starts to lift up. This is what you do not want to see. If it takes out the lows of this bar, you must sell. Okay? Advance it. And it continues upward. And it marches. So you're okay. And then it goes sideways. And this is, just meandering through here. You've got a little shelf right here. You see this? You want to hang in there. And it does. Continue onward, and it's okay. We've got an hour to the close. These are 10-minute bars. And this is where it closes. So again, you bought it taking out the highs of this bar. You can narrow it down to 5-minute if you want, but there's a lot of noise in 5 minutes, so I'd encourage you to stick with 10 more. And I'm going to be really specific here. You bought it taking out the highs of this first 10-minute bar. If it took out the lows of that first 10-minute bar, you must sell because you're wrong. Okay, I can't stress that enough. So let's proceed forward. This is where it closed. Go to the next day. It gaps up. Don't buy the gap up. Okay, wait. This is Friday. Advance it. Here we go. It falls below here, which is not really that important, but more importantly, it took out the highs of this bar. See that? That can be a trigger to buy. If it takes out the lows of this bar, that would be a trigger to sell. That's simple. You're okay, you're okay, you're okay, you're still okay, you're getting close. You may have actually triggered on that bar. What would be the saving grace if you wanted to sell or wanted to wait? The low on this bar is 680.56. The low on this bar is 680.18. It came and took out the lows of that bar, but what is the best part about it? If you were watching, you could say, I'll give it a little bit more room. Why? The volume was very low. So let's see what happens. Still down there on a slight pickup in volume. See that? Now you're getting concerned. When you saw that pickup in volume, you better be selling some. And then you get this, on a pickup in volume. What would you do? You would sell the rest. So there you go, right there. And we know what happened. You got this. So, you see that? That's the real world. That's 20 points is what that is. Okay? That hurts. So you can see how this works. Buying a gap up. Let's see if we can find another one real quick. I'm going to pause this and see if I can find one. Hold on just a second. All right, I found another one here. NVIDIA. This is the close right here on Thursday. This is the close. This is a 10-minute chart. All right, we're not going to look at the daily. We're going to do this. See, you look at the daily chart, you're seeing an entire day's worth of action. We don't know what's going to happen the next day. So this is the close on Thursday. What does it do Friday? Here we go. Advance it on 10 minute. It takes off and it gaps up right there. You could buy this gap up, okay? Or you could wait and see what happens the next bar. If you buy this gap up, you've got to be careful that it does not fall below the lows of this bar. Advance it one bar and let's see what happens. If you waited, you would have bought the high of this bar. Okay? So let's advance it. It continues. It drops, but it does not take out the lows of this first bar. This is your sell point. I'm sorry, I'm not trying to belabor this, but I think it's important that we're thorough with this. Does okay. Just marching it through. I'll leave that line right there. We don't want to take out the lows of this bar. Now I'm going to pause here for a minute. You see this little shelf right here? And I'm going to draw it for you. This is the real world. Oops, I'm sorry. My mistake. Why is it doing that? It shouldn't do that. I'm going to have to call tech support because that ain't supposed to happen. There. It can't take out the lows of this bar. If it does, it's going to be sold. Advance it. And it's marching. Now you see this other consolidation zone right here, that little line? If you bought it, you could actually raise that point up to here now, below that line. You're constantly running it. And it came close, but it didn't touch it. And that's the close. So specifically, what are we doing? You wait that first 10 minutes, and then you've got a potential entry after that first 10-minute bar. If it takes out the lows of that first 10-minute bar, you must sell because you are wrong. And that is how you can buy a gap up. It is an aggressive tactic, and I also have to share this with you. If you do this, you're pretty much glued to that stock for a good portion of the day. But after it's moved away from your price, you can always put either a stop in there or a price alert and let it work. Anyway, this is for Ernesto and everybody else. How to buy a gap up, all right? How to manage it. And that's the real world. And that's how some of the best traders out there, that's how they do it. Okay? So that's a fact. Anyway, and that's even one who won the U.S. Investing Championships around the turn of the century. So anyway, I wanted to share with you, and I hope it helps you, Ernesto, and everybody else, how to manage or how to buy and manage a gap up. But never if you buy a gap up, be careful if it takes out the lows of that first bar, because it can just keep water falling and wreck you. Anyway, there you go, and I hope that helps you. I try to go slow to be real specific. Thank you.